There are different types of liquidity in the US. The Fed net liquidity is the Treasury General Account, which is the Treasury. The reverse repo is somewhere between the Treasury and the Fed. There are also quantitative and balance sheet users. The cryptocurrency market could reach an amazing $100 trillion, according to Raoul. This is because of the way global cash flows. He goes over the whole idea of core and how the fast growth of the business is due to bigger economic trends. BTC lost 3.4% when it went below the $63,500 support level on August 26 and 27 and stayed there for 2 days. One reason for this drop is that people aren't as sure about the future of the economy. Another reason is that the Bitcoin network isn't being used as much. When traders break through the $61,000 mark, they wonder how much lower the price of Bitcoin could go. They also want to know if these things are fully taken into account in the price. A post on the X social network says that the price of Bitcoin could go up to $65,000, even though it was correctly forecast that it would go down to $61,000. Also, the stock market. This could happen after Nvidia's earnings beat expectations. At that point, smart money would move to get rid of late shorts who bet that Bitcoin's value would go down. Still, strong performance in tech stocks doesn't always mean good things for Bitcoin. In fact, some analysts think the opposite will happen. Nim Matsuzawa, an economist, believes that future tech earnings could put investors' ideas about the US interest rate to the test. Takes away companies like Nvidia, he says that Autodesk will release its numbers on August 29th, and that HP and CrowdStrike Salesforce will do the same on August 28th. What we're seeing now is the opposite of everything Dan said. On the other hand, rates start to drop. When you loosen up on things, bond rates drop everywhere and the value of the dollar drops. That gets better. The dollar is now in the open market. That's right. It only began a few weeks ago, you see. That's right. This now means that it makes money easier for everyone. This is what makes the business cycle go. When the business cycle picks up, people make more money, invest it, and the markets go up. The business cycle has always gone in this way. That pattern is called FedNet liquidity. The Treasury General Account is the Treasury. The reverse repo is somewhere between the Treasury and the Fed. There are also quantitative and the use of the balance sheet. In other words, all three of them work together to keep this process running smoothly. They know that once they start turning on the faucets, the automatic buildup will happen, so Dan is right. Also, guess what? It leads to cash gains. They have to pay tax on their income. It starts to pay for debts. It's kind of like this cycle is the most repetitive thing I've ever seen in macro. How long does that last? Most likely not. But I think I've ever seen it so clear. That's how it looks. The easiest way for me to describe it is that this is the biggest deflationary nuclear bomb we've ever been given. And not many people get it yet. They are still fighting about, say, long-term inflation from the 1970s. I mean, are you kidding me? You have no idea what's going to happen. Also, production goes through the roof, which is a good thing. Yes. But I believe that people find new ways to make a living. I'm not that bad because I have a job. Yes. I think it's because we're letting a lot of people go, they're going to die. More and more robots and AI are taking their place. That is, you actually raise GDP growth by changing how it is shared. What the hell do they know? We'll figure it out when it comes up. Still, I don't think we'll lose our jobs just yet. I think that in 10 years, AI will give us abilities that let us do cool things. Winter, spring, summer, and autumn for macro. It's macro summer now. The dollar is going down. Rates are going down. We need to file all of our debts again. Most of the time, this is the best it gets. The ESM starts to get stronger. Things get better for business. It starts to reflect. The money for investments comes in. Now that's crypto. I'm not sure if the business cycle is getting better. It has to slow down first before it can speed up. Like, I believe that money should enter the markets first. That's what I think, and then the economies get better because the markets get better. I know you're showing some of that ice and stuff though. I believe they will be a little later than planned. Then you're showing in your it could be a health, but the Nasdaqs are at all-time highs and business is at all-time highs. I believe that markets will keep going. That's right. If you really think about it, when the business cycle picks up, which it will, so do earnings. This means that events business picks up, which means that sponsors spend more money on ads, which means that subscription stuff picks up. It works right away. That's what's coming up. We've all been through hard times, including you. What's coming up, it should be fine. And as Dan said, we all need to be much more careful about adding people because AI can make processes that work just as well as people. Oh, Jason, this is something we talked about the other day. Like the world is changing really quickly. CNBC says that if a company keeps making a lot of money, it's possible that the government will stop subsidizing its stocks. Right now, the bond market thinks that interest rates will go down by at least 0.5% by the end of the year. The CME Fed Watch tool says this. If this prediction turns out to be wrong, the stock market could fall because there is a 71% chance that the Federal Reserve will lower rates by 0.75% or more. One reason Bitcoin buyers are worried that a possible change could hurt the price of the cryptocurrency is this possible shift. The SP fundamental logic argument showed that home prices in the US were going up. According to Brian Luke, head of commodities real and digital assets at SP Dow Jones Indices, home prices are rising faster than the consumer price index. This is putting more pressure on the political agenda before the election season, as noted by Yo Finance. The Schiller index went up 5.4% year over year in June. In the end, recent data on the housing market doesn't support lowering interest rates quickly, which is bad for market risk and includes Bitcoin. There hasn't been much of a link between Bitcoin and the regular stock market, but some experts say that traders often hide their money in safe assets like gold and companies that make a lot of money when they feel risky. No, it's the same as last time with Solana. There are a few of them that I think people should be aware of because they are serious people with a lot of knowledge. I don't make those. Raoul, I have the same question for you. Before we talk about Solana and other things like that, how is your stock split up? I understand that it depends on how willing you are to take risks. Mine is all crypto. That makes me the wrong person to ask. Okay, so you're 100% crypto. I've been for 5 or 6 years. Dan is too without getting into trouble. What would I do if I were that family office group? What would be the best spread at this point in the cycle? Yes, Dan was right. That's a good amount of crypto. I see a lot of family offices that start at about 1% and end up at 20%. So I believe 10% or more is a good number. Because technology is in a stable bull market, you want to put a lot of money into it. You might finally be able to buy bonds and make some money that way. The steps are very simple. You can get your money back for technology. Since 2011, the Nasdaq has given investors a 17% gain every year. That's a big difference from the SP, which is 8%. It's a whole different game now that Bitcoin is at 147%. But yeah, I would just be focused on growth and willing to take risks. It should be that way. It's interesting that Dan brought up this point because these big family offices are not at all like that. They don't like taking risks at all. You think to yourself, well, and Dan talks about